Good morning, everyone, and welcome to this morning's webinar on export financing and to learn about the products that the SBA and EXIM Bank can offer your companies to help them get started exporting and increasing your business footprint globally. My name is Chris Leggett. I am the Program Manager for the Central Florida International Trade Office, as well as the Vice Chair for Trade Policy at the Central North Florida District Export Council. And it is both those organizations who are hosting this event today. So welcome. We've got two great experts to hear from today. Sandro Murtas, who is an Export Finance Manager at the Small Business Administration, and we also have with us Elena Mendez, who is the Regional Director, Eastern Region Small Business Group at the Export-Import Bank of the United States. We're going to be listening to their two presentations. We will start with Sandro talking about the SBA. A few housekeeping notes. I will be sending you copies of these presentations in PDF form later this week, as well as I'm recording this event and will send a link to this when it's uploaded to YouTube. I'll also mention that CFITO is going to be offering some great webinars next month where we'll talk to more of our local partners who are helping companies to export in Central Florida, including the U.S. Export Assistance Center, the Enterprise Florida Office, the District Export Council, and then finally the Small Business Development Center at UCF to learn about their export marketing plans. So with that, I will invite Sandro to start his presentation. And over to you, Sandro.
Thank you, Chris. Good morning, everybody. As Chris mentioned, I work with the Small Business Administration, and within the SBA, I work with the Office of International Trade, so working with the lenders and small business exporters to assist them expand internationally and access the working capital and the financing to enable them to be competitive in the international trade arena. You see also my colleague Rosalind Bryant information. She's not going to be a presenter, but she's a great resource for small businesses and lenders in the Central and Northern Florida region of Florida. So her information is there too, and she can be available to answer questions especially for the first for the information contained in the first few slides that in my presentation. Basically, the Small Business Administration, as most of you should know, is a federal agency. We have the mandate to help create and grow and expand internationally small businesses. And as part of our mission, we also provide assistance to small business exporters through our finance programs and technical assistance programs. Starting with the first question, how do we define a small business? Well, companies are defined by their industry and the role they have in those industries. And based on that, either on the number of employees or level or volume of sales, they're defined as a small business. For example, manufacturers, depending on the industry, if they have less than 500 or they can go as high as 1,500 employees, they can be defined as small businesses. Distributors, wholesalers, 100 employees or less, service companies, depending on the level of the industry, and based on their sales, they can go from 7 up to 35.5 million, are defined as a small business. And we also have, for companies that are borderline, We have what we call the alternative size standard based on either on net income or tangible net worth can also qualify as a small business. That is important in terms of financing, but also for one of the other services offered by the SBA, which is federal contracting. We assist small businesses to have access to federal contracts, either directly as a prime contractor or subcontractor. So having having a clear understanding if the company is a small business can open new opportunities for companies to sell to the federal government. And very important, I want to mention that the SBA also provides technical assistance. We do it either directly or through our partners, such as the Small Business Development Centers or Women Business Centers, Veterans Business Centers. So they're all programs that provide free of charge technical assistance through their counselors, and also access to training at a very reasonable cost. But SBA is very well known for its function of facilitating access to capital. And we do it through our guaranteed programs that we provide to the lenders to enable them to provide access to financing to small businesses. We have the 7A programs, which can go up to $5 million, and the small 7A small loans that go up to $350,000. So when we are talking about the 7A program, companies can and borrowers have access to long-term financing. Given longer terms, they can improve their cash flow because they have more time to repay the loan. We have fixed maturities, no balloons, and no prepayment penalty when the loan is under 15 years. And that is important because sometimes companies say, well, I don't want to get a loan for 20 or 10, 20 years, 25 years. And that is, SBA provides the benefit of spreading a payment throughout many years. So it makes it easier for companies to manage their cash flow. And there is always the option, if they want to repay earlier, to do that without a penalty, depending on the term of the loan. Also, we have the Express programs. We have different programs in terms of the SBA Express that goes up to $350, but right now, given the current situation, it has been expanded up to $1 million. And we also have the SBA Veteran Advantage. These are programs that are managed by the banks. It's like a fast track in terms of the processing, and it helps companies, small businesses access lines of credit. There are other also working capital facilities, such as the CAP lines that can go up to $5 million that can be used for working capital, for contract financing, for builders. So depending on the industry the company is in and the use of funds, they can use the CAP lines to access financing. Again, these programs are through the lenders. So it is the bank that will come to SBA and require a guarantee under any of these programs in order to provide the financing to the small business. We have other programs too, such as the Community Advantage. We have SBA intermediaries that that every year they receive funding from SBA in order to make loans up to such as in the case of the Community Advantage, up to $250,000 directly to the small business borrower. These programs are designed for small businesses that are not as what we define bankable. They're not ready for a commercial loan. So having access to direct financing will enable them to grow, improve their financial conditions, and then graduate to a commercial loan, either with a guarantee or without a guarantee from a commercial lender. So these programs are great for those companies that are moving the first steps. Sometimes there are some additional challenges that the business owners have, and the Community Advantage program can be a great tool to enable these companies to mature, grow, and have access to conventional financing. Another program that has had a lot of use during these last few years is the 504 loan program, which is a combination of financing through the CDC, Certified Development Companies, licensed by SBA and the commercial banks. And these loans is a great tool to assist companies to finance their fixed assets, having terms that are spread out throughout time, facilitate, again, helping them with their cash flow. And also, many companies taking advantage of the lower interest rates. They can access loans to refinance their debt at a much lower interest rate and access, of course, the equity they have in their commercial real estate and assets. We also have another program, the microloan, that is designed to, again, this is our direct loans through our intermediaries. They're designed for the underserved communities that small business owners can access financing up to $50,000. Again, this is not through a bank, it's directly through the SBA intermediary. And again, these programs are designed to facilitate access to financing to small business owners that have difficulties accessing financing through the commercial lenders. And finally,
sorry to interrupt, Sandro. We're just seeing your first slide. Are you going through the presentation, or is everything from just the one slide?
No, I'm moving through. Is it?
Okay, it's not showing up here. Let me see if I can share mine, the one I have of it. Now, which slide are you on, Sandro?
Okay, that's a good. Just 1 second. Be on slide 7. No, sorry, 8.
That's the one, SBA non-7A loans?
Yes, correct.
Okay, great. Sorry to have interrupted.
No, it's good that you told me. So another program that we have is the EIDL, Economic Injury Disaster Loan, which I'm sure you have heard a lot about this program that has been offered in the last few months to help companies to go through these challenging times and access financing for their business needs, their working capital needs during these months. And the EIDL goes up to $150,000, and with an interest rate of 3.75% if it's a for-profit company, or 2.75% if it's a nonprofit, and has a term of 30 years. So there's a long time to repay this loan. And again, like any other SBA loan, you can repay before the 30 years. We can go to the next one, please.
Okay.
So, like I said, these programs are out there not only for small business exporters, but for small businesses in general. So we can, any questions you have, my colleague Rosalind can also, you have her information there you can reach out to her for any questions you might have. So, in terms of export financing programs, SBA basically has 3 programs. We can go to the next one, Chris, please.
Okay.
These programs are designed to assist small businesses to access financing for their exporting needs. Why does SBA get involved with export financing? Well, first of all, we need to understand the important role that international trade has for and exporting as for small businesses. Let's take into account some statistics. 95% of the consumers live outside the U.S. 98% of U.S. exporters in terms of the numbers are small businesses, and they generate about 33% of the total export sales in terms of dollars that are from the U.S. And of course, small businesses that are able to compete both domestically and internationally obviously are doing something right. So these are companies that are growing, and that's an important segment of the small business community that we want to serve. Next one. A very important concept that we have to keep into account is the indirect exports. Sometimes we have companies that are selling domestically. They're not exporting directly, but some of their buyers are re-exporting the products. Yesterday, I was talking to a lender who was providing a loan for a company that does not export directly, but they have a couple of distributors here in Florida that re-export their products. So that qualifies the company for the SBA programs to access financing. And that is important when we look at it from the lender's point of view, because SBA offers a higher guarantee for those programs. Next one. So let's take a look at the programs that SBA offers. We have basically 3 programs. One is the Export Working Capital Program, which is a line of credit that can go up to $5 million with a 90% guarantee. We have the Export Express that can go up to $500,000, and it can be issued as a line of credit for working capital needs, and also can be issued as a term loan. And then we have the International Trade Loan. This is a fixed asset, a term loan that can go up to $5 million with a 90% guarantee. Next one, please. So these programs are designed to answer some of the questions that exporters in general, not just small business exporters, have, such as how do I get paid, how do I reduce my risk, how do I finance my export sales, how do I get money to for marketing activities to expand internationally, how do I grow, and how do I increase my capacity to serve international markets. So we go to the next one, Chris, please. So when we're talking about international transactions, we have to take into account how the transaction takes place and how the payment is made. Very briefly, as you can see in this slide, we have different levels of risk and different levels of financing needs. Of course, when we have a buyer, the buyer wants to buy the products and services and have the time to sell those products and services, before they repay their supplier. While the seller or the exporter wants to be paid upfront, so they eliminate all the risks related to the non-payment risk, and also they don't need to go to their bank to borrow money in order to finance their export sale. So depending on the method of payment, if you're providing terms, you're assuming the risk of non-payment. If you're paying upfront, you're going to have to go to your bank. You're going to have to borrow money in order to purchase the products and services. Plus, if you're sending somebody, a supplier, your money to another country, how do you get, how do you make sure that your supplier, once they receive the money, they will send you the products and services you paid for? In between these two extremes or the spectrum, you have different options that are available through financial institutions such as banks, and that provide different solutions in terms of how do I mitigate the risk that I don't get paid, or how do I mitigate the risk that I pay for something that I will not be sent to me. So you have instruments such as documentary collections and letters of credit. You have insurance that Elena will talk about later. You have also private insurance from other suppliers, depending on if you qualify for domestic content or not. And then you can always go, and this is my recommendation, always talk to your lenders, to your bank, making sure that you have access to the international bankers at your financial institution that can provide you with all the details and benefits of the different options that you have in terms of international methods of payment. Next one, Chris, please. So, which method of payment we choose, it will depend on different factors, such as competitive pressures, customer relations, how long have you been doing business with them, industry standards, and sometimes you also have regulation. But the method of payment you choose, if you're offering credit, definitely you will have to have access to financing. Next one. And very important, especially at the first, when you're moving your first step into international markets, you will need to invest in order to generate potential sales. So investing in, for example, in going to trade shows, certifying your products in order to be sold in international markets, travel to foreign countries to meet potential buyers. So all of these are expenses that needs to be incurred in order to develop those markets. And for that, next one, Chris, please.
Sandro, I just want to mention we're at about the 25-minute point.
Yes.
Thanks.
So for that purpose, SBA has developed the Export Express, which is a very as I mentioned at the beginning, it's a fast-track program through your bank that you can access up to $500,000 with a 90% guarantee to provide for the bank up to $350,000 and 75% up to between that amount and $500,000. What we do require is that the company has been in business for at least 12 months, even though not exporting, and it's entering or expanding into foreign markets. Next one, please. And as I mentioned, you can use this line for export development, trade shows, modifying your products for international markets, finance small transactions, issue standbys, letters of credit if you need to provide a guarantee to your buyer, for example, if they provide you with an advance payment, and it can also be used to finance fixed assets. Next one. As the company grows internationally, we will need to increase our capacity. For example, we need to expand our facilities. We need to buy new equipment. We need to have access to permanent working capital, or maybe we need to refinance that. And for that, we have, next one, please. We have the international trade loan. This is basically a term loan that can go up to $5 million with a 90% guarantee. Again, the company can use it for different purposes. As I mentioned, expand your capacity, commercial real estate, equipment, have access to permanent working capital. You need to build your inventories. You can use that money for that purpose. And you can also, again, refinance that. And that's a recommendation we're giving these days, in which interest rates have been going down so much that it makes sense to refinance your debt. This loan can also be used if the company is reshoring production facilities from a foreign country and they will re-export from here, or has been negatively impacted by foreign competition. Next one, please. As also very important, especially at the beginning, the company will have, when their export sales are lower, they will have, they don't have a need for a large line of credit. But as export sales hopefully keep growing, many times the companies will see that their cash flow gets tight because of the export orders. Remember, if you're selling internationally, you will have to have, or the time it takes to carry out the transaction from the order to the delivery to receiving the payment gets longer, so that ties up cash flow. So, and that can create a problem for a company. So that's why SBA has, next one, please, has designed a line of credit specifically to finance export transactions. It's called the Export Working Capital Program. This line of credit can only be used to finance export sales. This line can go up to $5 million with a 90% guarantee for the bank, and can be used to finance a single transaction or multiple transactions, depending on the sales volume of and the frequency of export sales for the small business. But let's say the company can do a transaction a year, but a transaction might be for 1 or 2 or 3 million. So it's a large amount of money, and they can use the line for that purpose. Or we can do an asset-based line of credit using export inventory and foreign account receivables in the borrowing base. Next one, please. So, getting into the detail of how the line works. Basically, you have a line of credit in place. You can get advance rates up to 75% against export inventory that you have in your warehouse, or you can go up to 90% against foreign account receivables. You've already made the export sale. Your client will pay you in 30, 60, 90 days. Then you can get an advance against those foreign account receivables that are backed either by insurance or by a letter of credit. And that helps companies, especially small businesses, access financing for the other export sales. In terms of what SBA and the bank requires to guarantee that line of credit, it will be the first lien on all assets being financed. So the foreign account receivables, the export inventory. If you're getting paid with a letter of credit, that will be assigned to the bank and to guarantee the line. And if you have export insurance, credit insurance, that the bank will be the beneficiary. And then any other assets that the lender requires. And of course, just like any other SBA loan, each of the owners that has 20% or more ownership in the company, they need to provide personal guarantees. But that's a standard procedure. And
Sandro, we're at the halfway point now. Is it possible to just wrap up the presentation in the next 30 seconds?
Next one.
Thanks. Oh.
Thank you, everybody.
Thanks.
You have my information, so any question that they might have, please feel free to direct it to me. Okay,
and now I'm just checking to see if there's any questions here for you. I don't see any. So Thank you, Sandro, for your presentation. Sandro has to leave us at 11 o'clock, but I will also be providing his contact information in the email message that I send to follow up, and you've got it right here on the slide, sandro.murtas@sba.gov. Now, I'm going to pass it to Elena. It looks to me like she's not muted, but
Chris, can you see my screen?
I don't see your screen, but I can hear you.
Yes.
Do you need me to share the?
Hello?
Yes, we can hear you, Elena.
Mm-hmm. Let me see. There.
We've had some issues with Elena being able to hear people on the webinar.
Okay, so let's see. There. How about now? Hello?
Hi, Elena. I'm
Chris?
not sure whether you can hear me, but check the chat.
I can hear you.
Okay. Well, please,
Okay.
we can hear you fine, though we can't see your slides.
Can you see my screen?
No. Well, why don't, since there seems to be an issue with that, I'm not sure if Sandro is still sharing his screen and can unshare it. Maybe that's what the issue is, but otherwise
okay.
I'll use the slides from my end. How about we just use the slides from my end? Oh, Sandro's off now. Yeah, I'll just do the presentation from my end. Let me just bring it up here.
Can you see it now?
No, it's still just showing Sandro's slide for some reason, and I'm not sure. Let's try.
Maybe you can use the one I sent you this morning.
Yeah. Yeah, I'm not sure what's going on here. Just get. Okay, I'll just use the slides that I've got for you. Just one moment. So yeah, you can go ahead and start your presentation.
And now I don't see the.
Okay.
Okay. Okay.
So the presentation's up, Elena.
There we go. Perfect. Good morning, everybody. Sorry about the technical difficulties, but this is the way we're living in these days. I want to welcome all of you and thank you for your time. I'm going to be complimenting some of Sandro's comments. I want to make sure that the presentations show that we do complement each other in both agencies. Although the programs are similar, there's subtle differences, but we're here to help the small and middle market exporters increase or be successful at exporting, and especially during these challenging times. Next slide, Chris. For those that are not familiar with EXIM Bank, I wanted to introduce ourselves As many of you already may know, we are a federal government agency, and we are established in 1934. We are considered a boutique bank because we have less than 500 employees nationwide, but we do support a great deal both in small, middle, and large businesses. Chris, can you advance the slide? We are established in Washington, D.C., but however, we do have representation throughout 12 regional offices in the United States. In my case, I'm based in Miami, which covers a good section of the southeastern United States, and obviously we do represent Florida for that purpose. Next slide, please. Sandra already mentioned that we have only 5% of the world population as far as sales opportunities are in the United States. So if you're still covering if you're the major share of your market or your industry in the United States, you're still not tapping into the potential opportunities that exist outside the U.S. Next slide, please. So what we're trying to cover today is going to be generally the working capital guarantee, as Sandro is going to complement my comments. We obviously want you to have pre-export financing to be able to fill orders, especially if you're a manufacturer or a distributor. But it's also important to talk a little bit about, move forward. Okay. All right, so I'm going to backtrack a little bit. The spectrum of risk, Sandra already covered as well. I did want to mention that it's important to note that while payment in advance is very comfortable for a seller to have, the buyer actually is taking a risk that if they don't know the seller, they have no experience prior to buying from that seller, they may lose that payment in advance. So they are taking a high risk. So we're trying to find a middle ground where, back up a minute, where the exporter feels comfort as well as the buyer. And I think that the benefit here is to find an open account payment term for the buyer, but at the same time, mitigating the payment risk to the seller. And that's where our accounts receivable export credit insurance program comes in, which I'll talk about a little bit further. Next slide, please. Oh, okay. I'm not quite getting the next slide, but anyway, the products that we're going to look at, like I said, was the working capital guarantee, which is similar to the program that Sandra just went through on SBA. It's a little bit different. We have subtle differences, as I mentioned. For one, we have to meet a U.S. content requirement because the mandate of our agency is to support U.S. exports by sustaining or increasing U.S. jobs. So anything that has to do with U.S. labor has to be tied into our programs. In the case of Sandro, even though the product is not U.S. origin, he's able to do so as long as it's exported from a U.S. port. So let me see. The receivables insurance, we're covering 3 areas. One is going to be risk protection, which is obviously payment risk is very important to the seller. We offer programs that cover between 90 and 95% of the risk in the event of a claim. We're also allowing that these policies be used as an enhancement of credit for the lenders, and they're able to extend credit with the assignment of proceeds of those policies. And of course, being more competitive in the marketplace by the extension of credit to your buyers. Your buyers can only buy as much as they have in their cash flow. So allowing them to receive the goods and give them a short period of time to sell them increases your chances of getting repaid on a prompt basis. And we are also going to talk about foreign buyer financing for the financing of U.S. capital goods, and that's at the medium and long-term programs depending on the amounts. I'm going to touch a little bit on that. Next slide, please. We do cover a variety of industries, and the traditional industries obviously are manufacturing, distribution, of course we're talking about capital equipment as well across the board. But I wanted to make sure that we understand that services for us is considered an exportable service. So in the case of consultants or attorneys or CPAs or any service provider in doing export services to overseas buyers or clients are eligible to be considered under the Export Credit Insurance Program. We're also in the agribusiness area, since we are in the Orlando area, Central Florida. The agribusiness industry is strong there. We do provide opportunities to cover the export of both agricultural products as well as agribusiness-related products under our policies. Next slide, please. How are we going to do this? Of course, pre-export financing, we are going to do it under the working capital program, just like Sandro's program has been presented previously. We are going to cover the risk of your payments as well as the possible access to capital through the lender programs, and including the ability to become more competitive in the marketplace through our accounts receivable insurance or the export credit insurance program. And the foreign buyer program has to be the U.S. capital goods exports through the medium or long term, depending on the case. Next slide, please. I think I covered that one already. The spectrum of export finance is basically starting with the pre-export financing through the post-export financing, and we do cover programs throughout. In the case of SBA, we work very closely with them in the event that they wish to cover the working capital guarantee with our export credit insurance. We're able to do so, and that implies two things. One is the working capital guarantee program on both cases, in both SBA and EXIM, requires that the exporter pay the lender regardless of what happens post-export. So if your buyers do not pay you for whatever reason, you are still obligated to pay your lender. So the export credit insurance allows you to be protected against any non-payments, and therefore the flow of the transaction is covered on both sides. Next slide, please. The working capital guarantee program allows us to provide the lender with a guarantee to back up the credit facility for the exporter, and we cover a 90% repayment guarantee. It is either transaction-specific or revolving line of credit. We do not have any maximums or minimums, although we have to mention that depending on the lender and their credit policy, we do have to take into account that some amounts may be too small for certain lenders. So we do have a variety of lenders using our programs, and we'll be happy to refer you to the appropriate lender depending on your needs. It supports advances against export-related inventory and foreign receivables, and it increases those borrowing bases in many cases based on traditional borrowing-based or asset-based lending. Next slide, please. On the chart that I have supplied, you can see that in a typical case, a bank will not be able to lend in many cases for work in process or foreign accounts receivable advances, but with our working capital, the advance rates shoot up to between 75 and 90%, depending on the bank's lending policy. Next slide, please. So the export credit insurance I have mentioned, of course, the primary reason most exporters request export credit insurance is so that the exporter is protected against non-payment from their buyer, and that covers both commercial and political risks. As a marketing tool, it enables you to become more competitive in the marketplace. If your competitors are offering open account terms and you're offering payments cash in advance prior to shipping, definitely the buyer is going to consider the open account terms as being more attractive. So that's important to take note, especially when you're small, competing against larger competitors. And again, the financing aid is that the lenders are able to get the assignment of the proceeds from your policy and include it into the borrowing base as a possible increase in your line of credit. Next slide, please. The export credit insurance depends on you as the exporter. If you have SBA-defined small businesses, you have access to a couple of more options than the bigger exporters. The export insurance is the ideal for those who do not have any experience exporting or have no real export credit experience. In other words, you have not given open account terms to your buyers for more than 5 years. That allows you to have us do all your background checkings and credit reports on your buyers and basically underwrite and approve them without any additional charge. The multi-buyer policies are for both small businesses as well as large businesses, but in the case of small, we have a 95% cover. It's no deductible. All these insurance policies are pay as you go or pay as you ship. You basically don't have any payments to make advanced premium payments as is required in the private sector. If you do not use the policy, you have no expenses as far as paying premiums. And then the single buyer is for a one-shot transaction with one buyer or one particular buyer throughout a course of 12 months. That is a 90% cover. The premium is based on the country and buyer risk, so it's a customized premium. All policies do require a $500 refundable deposit, which is returnable in the event that you cancel these policies. So technically speaking, you're talking about expensing the premium, which can also be passed on to your buyers as the cost of credit if you're offering both open account and cash in advance terms. That would be considered the cost of credit, which is very reasonable to consider. Next slide, please. Foreign buyer financing is simply that we will refer you to a lender who is able to finance the capital goods directly to the buyer and cash you out for the payment of that shipment. So it's usually a 15% minimum cash down payment depending on the U.S. content of the product. If it's above 85% U.S. content, we consider anything no less than 51% can be financed as long as the difference is presented as a cash down payment. The repayment terms usually are 1 to 5 years for amounts of less than $10 million. And we can usually do that through the medium-term guarantee program, which has to be through an EXIM Bank approved lender. Or you can also request an export credit insurance medium-term guarantee, which can be assigned to the lender, and the lender takes on the financing from your buyer. Next slide, please. The programs that we're discussing have support in over 180 countries worldwide. We just had an updated country limitation schedule, which is a real-time document online. So you need to go to our website to check if that country is open or closed. The closed will be indicated by either an X or just simply saying closed on the country limitation schedule. These are usually countries that have to do with sanctions, U.S. sanctions, or that their economic or political scenarios are very unstable or uncertain. So in the case of Latin America, we have a few. Obviously, Haiti is closed. Cuba is closed for sanctions. Venezuela, Nicaragua. I believe that there's been countries that have opened recently. One that comes to mind is Bolivia. So it's important to check it constantly because we open and close depending on the circumstances of the country's eco-political climates. But we are definitely open in over 180 countries worldwide, so there's plenty of market to choose from. Next slide. I just put a chart up that indicates to you what we do and don't do. We do not support military or defense-related products, including military police of that sort. There are certain exceptions to that rule. It can be humanitarian, drug interdiction, or dual-purpose transactions, but that has to be vetted through our engineering department to be sure that it meets the exception rule. But generally speaking, we don't support military. Military, obviously, meaning foreign military governments. Provide grants, imports, even though our name unfortunately says Export-Import Bank, we have only done one import in the history of the agency, and we have changed our mandate since then, so it's only supporting U.S. exports. Startup sales, although we don't support them, we will advise them to refer to our sister agencies or resources that will help them to start the business as well as learn about how to export. So we will be happy to provide you with that guidance. No crude oil sales, no direct investments, no personal loans. Basically, we are trying to support the U.S. export of goods and services, and obviously with focus on helping small businesses increase the exports. It's important, especially in this climate, to note that in the crisis of 2008, 2009, many of our exporters had testimonials indicating that thankfully they were exporting, and because of exports, they were able to survive a domestic crisis. So the diversification of your sales between domestic and international is very, very timely right now. And I think that even though this is a global pandemic, there are certain markets that are recovering very nicely, and we should consider that some products are even more in demand now than others. Next slide. I wanted to give you some additional resources. We do work very closely with our Regional Export Promotion Program members, of which Central Florida International Trade Office, our host, is a member. They work very closely with us and will be able to guide you very well with our programs. We also have a network of export credit insurance brokers whose services are free of charge to you. They will assist you in entering and submitting applications for the export credit insurance program. And we also have EXIM Bank approved lenders who will work with you with regard to the working capital program. I also wanted to mention, next slide, I'm sorry, I think I might be ahead of you, Chris. There's other government resources that I wanted to mention that don't necessarily come into our immediate partners, but locally we have Central Florida SCORE, who is excellent in assisting new companies, both domestically and internationally. The SBDC, who is very actively helping our exporters as well. They are part of the SBA group. And of course, the National Entrepreneur Center in Orlando, a very strong supporter of our programs, both SBA and EXIM. At the state level, we have Enterprise Florida for manufacturers and distributors in the state of Florida. Especially manufacturers, they have a lot of incentives to bring in manufacturing to Florida. So look them up. They have excellent programs, and we work very closely with both EXIM and the U.S. Department of Commerce, as well as SBA. The Florida Export Finance Corporation are for those exporters that have exhausted their search for a traditional lender. They will be able to assist you in finding working capital in other partners that they have in the state of Florida. And of course, I have the U.S. Department of Commerce, Small Business Administration, and I also want to mention the U.S. Department of Agriculture, because they do have the Foreign Agricultural Service program, which allows you to export, especially bulk agricultural service. The bulk ag is under the GSM 102 program, and we also complement that activity with a 98% cover under our export credit insurance. I do want to mention with COVID, we have been doing some incentives, one of them being the agribusiness incentive that we are looking at rural areas of the United States, not only Florida, to support the export of U.S. agricultural products as well as agribusiness type products, whether it's related to machinery, any products that relate to the agribusiness industry. So I am going to basically distribute my presentation to you with an extended version of what our updates are related to COVID, as well as other coincidental updates that we were working on before COVID hit. One of them being the credit standards. We've improved and updated the credit standards to be more streamlined so that your customers are able to access higher limits with more streamlined documentation. Let me see if I can mention a couple of things. Also, I wanted to talk about any exporters that are exporting medical devices. We do have a restriction right now on PPE because of the domestic demand. We are restricted from supporting PPE exports. That is going to be reviewed on September 30th, and it may be lifted, but at this point we cannot support PPE exports. Let's see, temporary programs to provide support to exporters and foreign buyers. Any current exporters using our programs, we've been able to be more flexible with the claim reporting periods, as well as allowing the reporting to be a little bit more lax. We want to be sure that the exporter gets the benefit of the doubt to be able to collect from their foreign buyers. Of course, there's delays due to COVID-19, but we definitely need to take that into account, and we are absolutely conscientious of that and supporting the exporters in that sense. We have also updated our working capital guarantee program to allow more flexibility. and I am going to send that over to you after the presentation. Read at your leisure. The point here being is that if you wish to continue this conversation, I'll be happy to schedule a call with you on a one-to-one basis. I also will send you some useful links to review the coronavirus initiatives that we have here in the agency. But anyway, I'll be happy to either take your questions now or set up a call separately once we get to this issue. I hope I can hear you. If I can't, I'll ask Chris to repeat the question so I can respond. Thank you so much for your time.
Thank you so much, Elena. I have a question here in the chat box where Warren Boyd has asked,
that might
as
be
a
better.
Montana-based, sorry?
I'm sorry, you're breaking up, Chris.
As a Montana-based mining corporation interested in increasing export sales, is there a regional office available to them?
Ooh, I got half of that. Is there a question on the chat line?
Yes, it's in the chat line.
Let me see. Okay. No, don't see it.
I've sent it again, Elena. Are you able to see the message?
Okay.
Sorry, Elena's having audio issues. I know the quick answer to this question, Warren, will be that yes, there are regional representatives.
I'm having an issue with the bandwidth, apparently.
Okay. And I'll make sure that Elena is able to get back to you. But if you go on the EXIM website, there should be somewhere on there that will help you.
As a Montana-based mining corporation interested in increasing export sales, is there a regional office available to you? Yes. The regional offices are basically set up in three groupings. We have an eastern region, central region, and a western region. I believe Montana is reporting into California. If you send me an email, and I think Chris already put up my contact details. If you send me an email, I'll be happy to introduce you to the person in charge of Montana, or you can also go to the website and contact us. We'll bring you to our drop down of all our regional offices. And I think you might have, it's either going to drop down to California or to perhaps Seattle. I'm not too sure because we've been doing a little bit of changes on the mapping. But definitely Montana will be listed as one of the states covered in that particular region. So if you need any help, I'll be happy to assist you. But, you know, of course, I will be happy to also introduce you to the person if you can't find them on the website.
Thank you, Elena. I see a question again from Olga Haberland, who's one of our DEC members, asking about a PDF of the presentation with contacts. Yes, gosh. Those will be sent to everyone, as well as with a link to the YouTube video of this presentation. If there are no further questions.
I'm sorry, Chris. I missed half of what you said. Sorry. Thank God you're listening to me because it would have been more difficult. So.
Yeah. So seeing no further questions and being mindful of the time, I'd like to thank everybody for joining us today. And I would like to mention as well that one of the last slides we saw from Elena was about the great local resources we have to help exporters. And that is going to be the subject of a series of webinars next month that we'll be holding. I'll send you information about this with the follow-up to this call, but on September 9th, we'll be talking to Ken Moradian of the U.S. Department of Commerce. On September 16th, we will be talking to Mike Cooney of Enterprise Florida. On September 23rd, we will be speaking with Karen Arnon, who will be representing the District Export Council. And then finally, on September 30th, we will be talking with Jill McLaughlin and Noreen El-Attar of our local Florida SBDC office at UCF, who will talk about the export assistance plans that they have. So on behalf of Central Florida International Trade Office and the District Export Council for Central and North Florida, and I just want to note that we've got several representatives from the District Export Council here today, including T. Prasad, Olga Haberland, and Margie Lang. That we're all here to help mentor companies that are looking to export. And also, I would like to thank on all our behalf Sandro Murtas, who had to leave us, but also Elena Mendez, who gave an excellent presentation on the programs available through the EXIM Bank. And I will provide you again with all their contact information so that you can follow up with them. So thank you everybody for joining us today, and I wish everybody a terrific day. Bye-bye.